Welcome to the deep dive. Today we're exploring Tuan Heritag3 Residency. It's a fascinating project, full of contradictions, really. We've dug into the research, the analysis, and basically our mission here is to help you unpack its complex reality. It definitely offers some significant value, but you absolutely have to weigh that against its environment. Let's get into that core conflict.
Yeah, that's a good way to put it. So Tuan Heritag 3 Residency, it's freehold, which is a big plus. You own the land, 45 stories, single tower, serviced residence in KL, due 2028 by CPI Land. It's number 3 in their Tuan series, sometimes called Tuan 3. But the real tension, like you said, is this. You have a really compelling package. The developer saw it, it's freehold, it's a genuine TOD, has this unique theme. But that's pushed right up against some, well, significant and pretty undeniable environmental and location issues.
Okay, let's break down the good stuff first. What's grabbing people's attention? I mean, CPI Land, they've got a pretty good track record, right? Tuan Residency finished in 2021. Tuan Tugasi, that's actually ahead of its 2025 schedule, even with the pandemic slowdowns, and people say the finishing quality is high. Like, what you see is what you get from the brochures.
That's the feedback, yeah. And what's really captivating is the architecture. It's this blend, kind of British colonial meets old school train station. And it's not just, a coat of paint. It's built into the design. Makes for some very Instagram-worthy spots, definitely. Gives it a real edge, a differentiator in the market, especially appealing to maybe a younger crowd.
And the connectivity piece, you mentioned it's a genuine TOD. What does that actually mean here?
It means a dedicated covered walkway, about 350 meters, straight to the Segambut KTM commuter station. That's huge. Plus, they're adding a free shuttle. Takes you to the nearest MRT, nearby malls. It tackles that, tricky last mile problem.
All right, that last connection is often the missing link.
Exactly. And their unit strategy is pretty smart, too. They've basically standardized everything. 3 beds, 2 baths, mostly 820 square feet, clearly aiming for young families. And they come semi-furnished. The claim is 95% of what you see in the show unit is included. So less hassle for buyers.
Okay, so proven developer, unique design, real connectivity, practical units. That sounds pretty strong. But here's where it gets interesting, right? The trade-offs. What are let's say, the daily realities of living right there?
Yeah, this is crucial. The immediate area, well, it's industrial. You've got factories, workshops, that sort of thing right nearby. And then there's Jalan Segambut. It's notorious for traffic, constant congestion. It's been like that for, what, a decade? The road widening is happening, but it's slow.
So noise could be an issue.
Definitely. You've got noise from Jalan Segambut traffic, noise from the KTM line itself, and then noise from the big highways nearby Duke. Sprint. People who looked at the earlier Tuan project sometimes mention junkyard views or traffic noise. Those concerns are still relevant here.
And the density. I saw the number. 12,269 units in just one tower.
Yeah.
That feels high.
It is high. And what that means practically is, well, vertical living. Amenities are spread out. Ground floor, level 9, then way up on the sky deck at 43A. So you could be looking at crowded facilities sometimes, maybe waiting for lifts. It impacts the day-to-day convenience factor inside the building itself.
Right. So putting it all together, who does this actually make sense for? If you're listening and thinking investment or maybe a place to live.
Okay, for investors, look, this is basically a gentrification bet on Segambut's future. Yes, there's likely strong rental demand, especially from people using public transport. But with almost 1,300 units hitting the market, expect serious internal competition. That probably means rental yield compression. Your rent income might not be super high compared to the purchase price. So initially, you might be looking at cash flow neutral, maybe even slightly negative. You'd be banking heavily on future capital appreciation, the property value going up, linked to those planned infrastructure improvements actually happening.
Okay, so more of a long-term appreciation play for investors. What about for people looking for a home?
For home buyers, particularly first-timers or young families, this is actually a significant opportunity, I think. You're getting a brand new freehold 3-bedroom home, and the price point. It's considerably lower than what you'd pay for something similar new in, say, nearby Montclair.
Ah, the location trade-off for price.
Exactly. The catch is you have to be okay with the daily reality of that industrial setting and the ongoing traffic situation. You have to accept that as part of the deal.
So the final word, what's the one piece of advice?
It's simple, but absolutely crucial for anyone considering this investor or home buyer. Go there. Visit the site. And don't just go once. Go at different times. Morning rush hour, evening rush hour, maybe a weekend. Walk around Jalan Segambut. You need to experience the traffic, the noise, the environment firsthand to know if it's right for you. See it. Feel it. Don't just rely on brochures.
That makes perfect sense. Personal experience is key. So, this deep dive into Tuan Heritag 3 Residency really brings it home, doesn't it? Sometimes the biggest value propositions come packaged with the most significant compromises. It leaves you with a question, really. What's the true cost of convenience for you, and how much are you willing to bet on a neighborhood's transformation down the line?